explain to people what science is and how it's evolved over the past decade or so.
Sure. Well, we began as a studio, which for us was defined originally as a holding company. So we were set up originally as a holding company where we would work with early stage founders in exchange for some portion of kind of founder grade equity, typically common shares. And we would act kind of initially as co-founders / investors with them, but we would have much more of an operational role than a traditional investor. And in the first kind of 4 years of science as that holding company, we built businesses with founders. We started businesses from scratch and we acquired companies. And so we had this kind of holding company system. And I think at that point, we were looking at IAC and different kind of conglomerates and wondering whether you could create an early stage, incubator studio that would have both earlier and later stage companies all within a single vehicle. That was the actual very, very beginning.
And then what worked out as you expected it and what didn't work, I think, in terms of this model?
Sure. So we had a handful of businesses that were highly disruptive that worked out in a really rapid fashion. And the first one was Dollar Shave Club, and the second one was Dog Vacay, which eventually became Rover. And both of those businesses went on to, grow really rapidly, raise a lot of capital. And suddenly we looked much more like a venture fund because we had a minority position inside these businesses. We were on the board. We had some operational influence, but we looked more like a traditional investor as they grew. Some of the business that didn't work is some of the companies we started in-house, we just couldn't get to scale. And suddenly when we looked overall at science as a structure, we realized that this holding company structure was really not the right structure for early stage. And we knew that we had to make the progress to becoming a more traditional venture fund. And over time, that kind of got reinforced to us.
And so why is it that the startup studio model didn't work when you look back on it? If you were being super critical and self-aware, what would you say the limitations of the model were? And then I guess how many swings at bat? How many actual companies or projects did you try? Because we all know 80% of startups in the early stage go to zero and fail. So if you only did 8 or 9, like maybe you didn't have enough that you started to actually know if it would work.
Yeah, we tried a lot. So the concept of taking experienced operators, similar to you and I, when we actually had built businesses ourselves and putting them around founders to get their companies up and running quicker and to scale quicker, that worked. And that continues to work. So that concept of a studio that provides more than capital, I think continues to be a highly viable model and greatly successful for founders. I think the concept of consolidating all that structurally into a non-traditional entity, that doesn't work. Mainly because startups have a long path to liquidity. They typically don't generate a ton of profit. You're obviously on this path of fundraising, and you need to work within traditional capital sources, which obviously was a fund. But over the past 9 years, we've tried probably over 120 different concepts. So we tried a lot. And the nice part is that things that didn't work, we were able to kill really quickly with very low capital exposure, which is a huge benefit to the model, meaning that you kind of figure out the things that are going to fail early, which means that you don't have to sink $500,000, millions of dollars into a concept that clearly isn't going to work. The other positive of the model is when you test that many things, you end up with really strong pattern recognition. So we end up becoming experts in particularly direct-to-consumer, startups. So whether that's products, services, marketplaces, mobile, I think we're uniquely positioned there because we've done so many of them, and because we're so connected to the metrics that drive them and the personalities of the founders and the approaches to the businesses. I think we have a better eye towards selecting those, and we know how to grow them very effectively now.
So do you maintain an internal team to build stuff to this day and market stuff to this day, or have you deprecated that?
So we maintain a studio and a venture fund in a side-by-side model where there's a studio that works with founders. That studio provides certain skill sets to those founders, definitely on the growth marketing side, but also quite a bit on business development and strategy and finance, et cetera. And then we have a venture fund that sits alongside. And the goal of the studio is to basically tee deals up for the venture fund. So once the studio works with those companies, kind of proves out the market viability, find those initial customers, works with those founders, then it brings it to the fund. And then the fund becomes a systematic way of investing in those startups to kind of help them rise. And then eventually we go out to external funders.